Hi, everybody. This is Gary Dean with Sentiment Timing. And in this video, I'm going to go over, I've been getting a lot of emails about our predictive analytics model and what it's all about. So I decided I'm just going to do another. We've been getting a lot of new emails. So some people may not really be too familiar with our work. So I figured that I would just do a quick review of how things work and how we make our trades. So to start off, Woody Dorsey, who's my partner in this, he's been around. He's been in the market since for over 50 years. He's been seen on all the major financial news outlets, and he's considered by many on Wall Street one of the best market timers in the world. So the way our predictive analytics model works is time, and that's when Woody he has his specific turn dates that he puts out. And some of them are going to be on an intermediate term, some are going to be on a long term. But in any way, time is what we go off of on it. From that, we're looking at sentiment, investor sentiment, to confirm that either a top or a bottom is coming into place. So, for example, when we were heading into the October lows, that's when we had told people, our members in July, that to expect some kind of top in mid-August, and in September is going to be a bloodbath. And so we knew the low was supposed to be coming in October. The sentiment part of it, there was 0% bullish sentiment. So everybody was bearish on the market. And then I just simply used the price to figure out where the low is going to be. And you guys know the rest. We've had a pretty nice rally off of those lows. So combining time and sentiment, what it actually does, time is always going to be our guide. So the way that I put out any kind of alert or trade rec that I'm making, we're going to be following the time path. So if Woody's bullish on the market or bearish on the market from mid-August into October, what I'm basically going to do is just be waiting for any. We're going to be pulling money out of our trades, and what we do with that is, instead of going long the market for the bounces, you wait for them to burn themselves out, and then you just short again, and you keep rinse repeating. So if you have say a 15% or 10% move on the S&P on the downside, trading the little squiggles in and out instead of just waiting, I could bring you to 40-50% gain just on one move. So we don't have to make trades every day. And if I don't see everything lining up on our predictive analytics model, then I simply don't make any trades. So the time part, our main reason why we do this is it controls your emotions. When you know when the market is scheduled to reverse, it allows traders to control their emotions. Even if the market goes the wrong way at first, you have confidence that the best market timer in the world is giving you these dates, and hasn't really been wrong that much. So Woody uses over 13 different market timing indicators. So that's how he gets the time part of it. And then, this is just an example. This is I put this out in the email before, and this is the 7/28/22 that we put out. And what Woody had said is, look for a drop near, I don't know, up near here, and then with a mid-August high. We are just about there. So basically, the mid-August high was, we were telling people in July about that, and then it says, what we put in here is the interim profile still suggests that the best low of the year may not occur until October. So we knew that the market was going to be going down from mid-August into October, and from there you could either simply trade the way down using the SDS or the SSO. They're the leveraged ETFs that go off of the S&P. So basically, if the S&P has a 5% move on the downside, SDS, I believe, is a short. I have to check. I was getting mixed up. But anyway, if that gets 5% on the downside, SDS is going to be 10% on the upside. It does the inverse of what the S&P is doing. And then the SSO, it goes up as the market goes up on a two-time basis. So we were on the long-term basis, what we were looking at was, Woody was looking for the top to come in December, after, really right after Christmas. And we were telling people from here that 2022 is going to be a bloodbath, and that's pretty much exactly what happened. Now, at the top, we had 99 bullish sentiment, which means everybody was bullish on this market. We had bearish divergences. Here you can see price made a higher high, this made a lower low. So this was a very easy trade to make on it, and from there, I believe we covered here and then got short again. So it's one of the things where we made a ton of money on this, and why, like I said, if we're not if I don't see a proper trade setup, then I'm just going to wait for it. And like I said, if we do 5 or 10 a year with making 10, 15, 20%, we're doing a lot better than everyone else. So here's the October low that Woody had pointed out. You can see we had 0% bullish sentiment reading. We had bullish divergences. And from there, that marked a low, and we had a nice rally off of those things. So we trade both ways, but we pretty much follow what the trend is. So the trend has switched to bullish into the next turn date, which members know already. And so we, instead of shorting the market, we just wait to buy the dips. So let's take a look at the sentiment and how this works. So basically, everybody's going to get euphoric on the market at the highs. They don't believe it's ever going to come down. Then when it starts coming down, you go through all the different levels of sentiment until you get into the depression part, where pretty much everybody gets extremely bearish on these markets when we're at the lows, extremely bullish when they're at the top. And let me just show you how this works. So this is going back to the 11. This is our 11/1/21 report. Notice how we had 90, 97%, 91, 94, and then when the top actually came in the 12, I believe we hit a 99 or 100%, and that marked the exact top. So we were looking for the turn heading into 2022, that we were going to have a major move to the downside. We had sentiment that was confirming it, and then we also had we had technical divergences in place, so we ended up doing very well with it. Now, as we look into this part here, which was the low in October, notice 0.10%. So this means that everybody is bearish on this market. That's when we were looking for the low, and from there, basically what we did was, hang on one second. Okay, so the low was coming in when expected. We had sentiment that was at 100. Basically, everybody was bearish on this market, and here we had bullish divergences. So it had all three things that we look at with our predictive analytics model to be looking on the long side, just like we had everything in place here when it was a top coming into play. So this is the way it is. You see a lot of people that they got long on the last move up and saying the market's not coming down. They're just guessing. They're going to be the emotional roller coaster that we make money off of. And unless you can anticipate when a top and a bottom is coming, you're going to get wiped out all the time. So that's really the kind of the gist of everything on it. Now, if you want it, the way that we make our trades, the SSO. So this was it. Basically, this is the one that follows it on the upside. So you can see this is our August 15th top in the S&P. SSO dropped almost 40%. I don't even know what the number is on it. It's pretty up there. But this was the low in October, 0%. It's 30% gains that we've made just since. I mean, we didn't make those. Let me rephrase it. But there's 30% gains since this October low. Now, if we take a look at the SDS, which it moves short when the S&P is moving. I mean, it moves higher as the S&P is moving lower. Here you can see that this was the mid-August top. This thing went from 38 up to 58. A 40% gain in just 45 days. So these are the types of trades that we do. We don't we don't have to be in a trade every second. So I put this out before when I sent out that little email, and it's our 100-point S&P guarantee. Now, what that means is in the next 3 months, if we don't accumulate 100 points in the S&P, you can ask for your money back. We won't ask any questions. We'll just give it back. These are the two specials that we're running now. This the 599. I have to limit this to only 5 people because we've gotten a few that have already come on, and that we're not, Woody's not too happy about giving them out at this price. So now I'm just limiting it. There's 5 more that are available. This is a $1,200 savings. And you're going to use the coupon 100 points. That will be in the email. Now, for ones that have been around for a long time, instead of paying the 150 a month, you can do the 1900 for 2 years. And what that is, that's a $1,900 savings. So obviously, this is the best deal out of all of them. But in any case, I take advantage of these. We have some major turns that are going to be taking place in the not so distant future. And anybody that was really doubting us in when we were heading into 2022 were vivid believers in us when we started making when we saw the market drop, and when we called for the October low back in July that this was going to take place, and that's exactly when it did. So having, using this predictive analytics model is hands down the easiest way to make money. Again, if you want to take advantage of it, take advantage of these specials. And with that, have a great night, and I'll talk to you at the next video.